All right. Well, hey, everybody, this is Troy Fullwood with Pinnacle Investments. And today I want to talk with you guys about 3 keys to managing your money through this financial crisis. But before I get too far along here, I want to kind of check a few technical aspects to our broadcast, make sure that we're dialed in here and we're connected correctly for everybody's benefit. We had to add in Facebook Live streaming. So we're streaming live to Facebook as well. So if that is an easier way for you to view this, then feel free to jump on Facebook and go to Troy Fullwood, my personal page, and you'll see it come through there. Let me see, I asked some people before we started here, make sure that we were broadcasting correctly, and so I'm gonna read through some stuff. Hear you fine, great, thanks Tommy, appreciate that. Chris, I can see you and hear you, Troy. Thanks, Chris, I appreciate that as well. Fired off an email back to you today, Chris. Thank you so much for your help on that stuff. Hunter Jones, I can hear you. Great, thank you. I can see and hear you. Elsa, thanks, Elsa. Appreciate that as well. You know, Wayne from Woodbridge, Virginia. Appreciate you being here today, Wayne. It's been awesome to put all this stuff together. We got Jeremy. Hey, Jeremy, thanks for being here. And oh, by the way, you're very welcome. No problem, buddy. Good to go, Gary. Thanks, Gary. Appreciate that as well. Sound and video is great. Mr. Jack Deweese out of Dallas, Texas. I think he's a suburb of Dallas, but hear and see you just fine, Mike. Appreciate that, Mike. Carolyn, hear and see you. Thank you so much. All right, and I got like another 50 of these here, so I'm not gonna go through all that, but I appreciate everybody chiming in and helping out with our technology thing. So we got that going. Now, let me see on the Facebook thing, make sure we're dialed in there. Let's pull this thing up. Those of you on Facebook, let me see here. Boom, boom, boom. All right, not seeing that there. I'd taken Facebook off my phone on March 1st, so I'm having to re-download the whole thing and all that other kind of fun stuff. But let me check this another way. All right, looks like we're broadcasting there as well. We got a little bit smaller to read. Elsa, appreciate that. Mr. Cody Cox, how are you doing, buddy? I hope you're doing well up there in Oregon. Thanks, Cody. Appreciate that. Got Michael R. Jackson. Hey, thanks, Mike. Appreciate you being here as well. We got Anthony. Welcome to the call, Anthony. All right, so I'm going to go back over here to Zoom real quick. Hold this up. All right. So I got seven pages of stuff on this bill that actually, good news, the House just passed the bill. So it just passed, so it's good to go from the Senate and the House. It'll probably reach the president's desk later this afternoon or even this evening, or I think at the latest by tomorrow morning. But I think it's going to be pushed onto the president's desk today to be signed. You'll see in the Dow Jones, if you're watching the stock market, it's been kind of a roller coaster ride, as we all know. But today it was down by about 900 points. And since the House passed the bill, it jumped up. It's down about 400 points right now. Let me see where it's currently at in regards to, well, we're down 570 based on yesterday's numbers. So it's kind of doing this thing. And the reason you're seeing that is it was the delay from Tuesday when the senators or when the Senate passed the bill all the way to today. Now, a lot of reasons that is. A lot of people had gone home and gone on a self-quarantine type, mini vacation, and rightfully so, understandably so. There's a seriousness to this entire matter that always needs to be, taken to heart. My view on it's a little bit more optimistic than I think a lot of the media looks at things. I look at it as being a very positive thing for our country in a lot of different ways, and I'll get into more of that later on as we go through this. But as a whole, we got some good movement, okay? This is the second of 2 bills on this issue. I think there's gonna be a third one. I think the House has drawn up its own bill as well, and they're going to look to maybe push that through in sometime in early April. Whether or not it goes through is a whole nother conversation. I'm not even sure what's in it, but they were able to, how do you say, pull it out of their desk drawer within a 24-hour period, pulled out a 14-page bill and put it together in 24 hours, which was rather remarkable considering it takes a lot longer than that to draft a bill. So probably something they had in the wings for quite some time, but I don't want to get into that side of the politics. I want to spend my time here today being of value to you guys, and I want to talk to you guys from what this means from a business owner standpoint, as well as what it means from a personal standpoint. So that being said, I spent about 40 hours studying this act. It's what's known as the Coronavirus Aid, Relief, and Economic Securities Act, also known as CARES Act. Kind of ironic how a lot of bills that go through the House and the Senate always have this, how do you say, positive acronym to it at the end of the day. But nonetheless, it's a bill. Here's what it includes, okay? It includes tax and financial breaks for both individuals and businesses. It was passed by the Senate, with a 96-0 vote on Tuesday night, and it was just passed by the House today. Chances are it'll go to the president's desk here later on this afternoon or first thing tomorrow morning, I would assume. They had to bring back a lot of the House members, to do that, which is what took time. I just covered that. So here's what I did. I went ahead and broke down this bill. Okay, it's an 800-page bill, and I went through and broke it down. I didn't get, overly granular on it because there are some things that may not apply to, the mass majority of people, and I wanted to, bring something that would apply to the masses, not just a few niche aspects to it. And I really kind of stayed in the area of personal as well as businesses and entrepreneurial real estate type environment. So here we go. Okay, so the first one here is they identify it as a recovery rebate. Okay, it's not free money from the federal government. It's a recovery rebate. And what that means is the most talked about provision is the recovery rebates for individuals. These rebates are actually credits, okay? Credits allowed on taxpayers' 2020 tax returns that will be paid out in advance, okay? Advance by the Treasury, okay? Each eligible individual will receive $1,200, $2,400 for married couples filing jointly, plus an additional $500 for every qualifying child. These rebates are intended for low to middle income families or individuals throughout America. So they're phased out for higher income folks. So if you're here and you're making $500,000 a year, you're not going to get a rebate, okay? It's not even that high, to be honest with you. I want to break it down even further here. For unmarried individuals, the credit to phase out for the AGI of $175,000 is fully eliminated at $98,990. Okay. For those filing as head of household, the phase out range is $112,500 to $136,490. Okay. And for married couples filing jointly, which would be like Kim and I, it's $150,000 to $197,990. Now, that is based off of your 2018 taxes or your 2019 taxes, depending upon which is the last filed tax return. Okay, so this bill is really designed to help people who really need the help. Okay, it's not designed as a free handout for everybody in America. It's designed to really dial into those that need it the most. So if you're filing jointly and you're below that 150,000 range, then you're going to get a rebate. If you're filing jointly and you're over the 197,990 range, okay, in income for the 2018, 2019, or 2019 tax year, you're not going to get anything, okay? You're not going to get anything. So you just have to keep that in mind. So going back to your 2018 taxes or your 2019 taxes, whichever one you have filed, I say most recently, like Kim and I, we just filed our 2019, taxes Tuesday. Yeah, Tuesday. Why? because they were done. I mean, our tax, we gave all the stuff in January to our accountant. He filed our corporate returns in March, and our personal returns were ready to go. And actually, he gave us our corporate returns like the 2nd of March, and the personals were done. And we have a refund coming back, so we'll get the refund, and then we'll see, where we land on this. We probably won't get the, rebate checks on this deal. So that being said, the Treasury will determine who will receive checks and the amount they are entitled to based on the individual's 2019 tax returns. Where no tax return has been filed at the time of the rebate payment, the Treasury will use the 2018 tax returns. So for those of you who have not filed either 18 or 19, the Treasury will provide a payment to individuals that receive 2019 Social Security or railroad retirement benefits as well. So if you're sitting right now on your taxes and you're thinking, okay, I'm not really sure what I need to do. Well, first off, if you've got a refund coming to you, file them, okay? Get them filed and get your refund. And based on that, we'll determine if you get any more money based on your overall income. If you think that you're gonna delay it and get the free money, the, what we call the recovery rebate, and get that, the minute you file your 2019 taxes, if they see that you've made over that amount, they will charge you back on that money as earned income and tax you accordingly. So, so you're not really going to get away with anything, because that's not really what it's designed to be. It's really designed to help people who need the help the most, which is a good thing, okay? Which is a really good thing. Some of us that don't need it, $1,200, or in this case, $2,400 for a married couple, isn't a make it or break it scenario for our household. It might be for other households, but we're not sitting here clawing at it to get money on $2,400 at the end of the day. So keep that in mind. It's really dialed into a niche portion of our population that really could use the help over the next short term. Where there's an advance rebate is more or less than the allowed because of the individual's filing status or family size is different in 2020. On the credit is subject to phase out based on the 2020 income. The adjustment is made on the 2020 tax return, okay? So next year's tax return, okay, this is gonna have to be considered income on that, and then adjustments will be made according to where you stand on the 2019 and the 2020 income, okay? So just, you're not gonna get away with anything. And if you don't put it on your tax returns, they're gonna audit you, okay? At the end of the day, they're gonna audit you. They're gonna send you a little letter telling you how much you owe, and you're gonna have to write a check to them to pay some more money. So there's no like loopholes, okay, as they like to say. Thus, individuals may be entitled to an additional credit or possibly have a payback portion, okay, of the payment they receive. This means that individuals who otherwise wouldn't have a 2020 return filing requirement based on their income will likely have to file to reconcile their advance rebate with their actual credit. Okay, so I know that this has been put out there as free money, and hey, I want my check, and hey, I'm going to do this, and hey, I'm going to do that. Understand that's what's going to happen to a large portion of our population, and that's great. But understand, if you're right there on that border, you're right there on that edge thing, don't, understand that there's going to be some tax consequences in 2020. Okay, there just is. Now, if you're well within the range and you're receiving the money because you need it, then there's the tax consequences are going to be less than at the end of the day. All right, that's page 1. We got a lot to do. The rebates will not be paid to individuals who are claimed as a dependent of another on a prior year. So a great example of that is my ex-wife. My ex-wife claims my older son, who just turned 19 in February of this year. So last year, I believe she claimed him on her tax return as well, or on her, she would be able to claim him on her 2019 tax return, I believe. So that being the case, because she claimed him, and I don't have a copy of her tax return, so I'm just using this as a scenario. If she claimed him last year on her 2018, now she can claim him on her 2019 tax returns as well, because he didn't turn 19 until January or February of this year. I'm not sure if they're doing 17 and before or 18 and after. That I didn't cover that part. But the point being is that most likely he's not going to get any kind of a check. Now, she might get a check in the amount of $500 extra for him as a dependent on her taxes. And whether or not she gives that $500 to him or not is a conversation between the two of them. But the point being is that that's a perfect scenario. So if somebody was there and they're no longer there, or if they were there, that person using that dependent is going to get the deduction on that and or get the check. Let me see here. I'm going to kind of cruise through this. Here's the thing. If you've not filed your taxes for 18 or 19, okay, now would be a good time to file. This step is especially important for low-income Americans who don't typically file taxes. In that case, they would still need to file the forms, okay? People receiving non-taxable income would still get checks, okay? People receiving Social Security benefits will also get a payment, okay? People on Social Security will also get a payment on it. It's not necessary to file your returns through a tax preparer to get caught up on your taxes. And this is more going to low-income individuals. And I'm sharing this with you guys because if you know anybody in your family, okay, or you have friends and things of that nature, let them know, like, hey, if you haven't filed your returns for the 18 or 19, you're not going to get anything. Okay, so they need to kind of, how do you say, get on the ball and get after that and make sure those things are put in place so that they can receive those monies, and rightfully so, because if they're low income, they're the ones who can benefit from it the most. Said, you've got the IRS has two paths, okay, for free filing options. One of those is making under $69,000 a year, and another of those for making above $69,000 a year. And you can find that information on irs.gov. Okay, you can go to the irs.gov website. You can find that information. Pick which path works for you, or for a family member, for a loved one, for a friend, a relative, anybody that you know that can benefit from this. People who are planning on receiving paper checks and have moved since they filed their last return should submit, okay, a change of address form, okay, so which normally takes 4 to 6 weeks to process. So if you moved, like Kim and I moved, we moved last September, okay, we filed our taxes last April, and then we moved in September. But then again, we've gone ahead and filed 19 taxes already. 72 hours ago. Point being is that 19 tax return has our current address, okay? Anytime we get rebates or refunds on taxes, we in turn, just have them direct deposit it into our bank account. We don't accept checks or anything of that nature because direct deposit's a lot faster. So keep that in mind. But if you have moved, you got to go in there to the irs.gov and submit a change of address form, which will ultimately delay your payment getting to you, okay? Just kind of FYI. So I'm sharing this kind of stuff with you because I'm sure social media is going to blow up the minute people start getting direct deposits and other people didn't get their direct deposits. So ask yourself the question, did they not get a direct deposit because they didn't file their 19 tax returns, or they had moved and there's a change of address form that needs to be done? There's always a reason they're not going to get it. Or if they want a paper check from the IRS, that's going to take longer. The IRS is first and foremost going to refund or rebate back to people who have their banking information on file with the IRS. Now, if you have changed your banking information, you have to change that as well with the IRS. If you closed one account from last year and now you got a different account this year, you're going to need to notify the IRS of that as well, so they send the money to the right account, okay? Just FYI. Taxpayers can get their checks a little faster if they've signed up for direct deposit to the IRS. To register for direct deposit, people should indicate it is a refund method on their tax returns to change the bank account or routing number, okay? Just talking about this. For the deposit, call the IRS customer service at 1-800-829-1040. Okay, that's 1-800-829-1040. By the way, the IRS has extended the filing deadline to July 15th of 2020 for the 2019 taxes. Now, keep that in mind. Yeah, they gave you another 90 days. But hey, if you got a refund coming back to you, I'd be filing them right now. Get your money back, get on with things, and let's go. Obviously, if you owe money, it's a benefit to have those extra 90 days to either go out and earn it, borrow it, do whatever you need to do to pull it together and pay the IRS. So that's a good thing. Okay, that's a good thing. It's a little, I say, grace period for people depending upon what side of the fence they're on. Okay. All right. So jumping into individuals. Okay. Additional key provisions. Okay. The CARE Act is over 500 pages, just covering, okay, tax provisions, economic stimulus, business loans, healthcare, and more. What I've done is I've put together an overview of the key issues relating to individuals and small businesses. Okay. If this sounds like an article, it is, because I wrote it as an article, but I'm sharing it with you in the video, and I'm going to send out this article. I'll post it up on Facebook after sometime later today or tomorrow. And I'm going to send it out to our Rolodex of clients and stuff so that they can have a copy of it as well. So if you signed up through Zoom to be on this call, you're going to get an email version of this for your own copies and records. All right. So, but yeah, that's what I did. I wrote it as an article. All right, penalty-free retirement withdrawals. Penalty-free withdrawals from qualified retirement plans, including 401ks, TSAs, SEPs, and traditional IRAs, are allowed. The withdrawals are limited to $100,000, and the income is taxable over a 3-year period, with an option to also recontribute the withdrawal over a 3-year period. Okay, so if you have an IRA, you can withdraw down $100,000 and then put it back without any penalties as well. Let me see, there's a 1-year waiver for 2020 required minimum distribution, RMDs, okay, from qualified plans and traditional IRAs for taxpayers that turned 70 and a half years in a year before 2020, and those that turned 72 in 2020. This prevents them from having to take distribution when the stock market is in decline. Okay, so if you're in that age bracket, that 72-year-old, 70 and a half, okay, to 72 years old, you don't have to take distributions, okay, out of your IRA, okay. That's been one of those things that I've got friends that have to do that every year. They kind of get irritated with it. You know, this is a year they get a little recess from having to do that, okay. Make sure I'm not, there's that other page. All right, charitable contributions, okay. The suspension of charitable contribution limits applies for 2020. Generally, for cash gifts, tax-deductible charitable contributions are limited to 60% of adjusted gross income, AGI. The suspension of the limitation will allow taxpayers to make larger charitable contributions during this trying time. Also included in the above line, charitable deduction limited to $300 of cash donations for these that don't itemize their deductions. Okay, so you can make some higher charitable contributions. So if you want to give to the Red Cross, or you want to give to your local church, or you want to give to, you know, anything that's a 501c3, you can actually give more. Okay, student loan payments. Now I'm going to cover this twice in this, but this is one area that I pulled out of there. Employees can exclude, okay, from income payments up to $5,250 made, okay, before January 1st, 2020, by their employers towards their student loans. Okay, so what they're saying there is, hey, your employer can hold that and give it to your student loan debt, okay, and it's non-taxed. Okay, so that's $5,200 in income that's non-taxed income that you now get to, you know, immediately put towards student loan debt. And I'm going to talk more about student loans here later on. Now, businesses. Okay, a lot of you are business owners. Payroll deposits delayed. In order to provide businesses with more financial resources to weather this economic environment, employers can delay payroll tax deposits for 2020 with a 50% not due until December 31st, 2021, and the balance due by December 31st, 2022. So if you've got a number of employees and you're using that capital to keep your business open and to run it, you don't have to pay the full payroll tax currently at this point in time, but you do have to pay 50%. Okay, let me see, where was that? Okay, payroll taxes for 2022, 50% has to be paid by December 31st of 2021, and the balance of it due December 31st, 2022. So you can actually break it up over like a 24-month period, which is a good thing for payroll, you know, deposits and things of that nature. Employee retention credit. In order to help businesses retain employees and keep them employed during the crisis, Congress has provided a refundable employer retention credit equal to 50% of qualified wages. This credit can be used to offset quarterly employment taxes. The qualified wages under this provision are limited to $10,000 per employee in 2022. Okay, so there's it gives the businesses more time to use that tax responsibility. It doesn't alleviate it, it doesn't wipe it out, but they've got more time to use that money in the form of marketing, supplies, hiring people back on, relaunching their business, all of those things that will go into restarting a lot of businesses, especially the mom and pop businesses, the smaller businesses as a whole. So that's a good thing. The carryback reinstated. Okay, so the NOL carryback. Okay, under the 2018 tax reform legislation, a business net operating loss (NOL) was no longer allowed to be carried back to a prior year. So you couldn't go backwards. Okay, you couldn't go backwards with your NOL. Okay, you had to go forward under the 2018 tax reform. Had to be carried forward to the next year, and the carry forward loss deduction was limited to 80% of the carry forward's taxable income. Okay, so under the CARES Act, carryback of losses incurred in 18 through 2020 has been reinstated, and the 80% of taxable income limited repealed. This is designed so businesses with financial problems can file for tax refunds from the carried back years when they were profitable and had paid income taxes. So it's a way that a business can actually go backwards and refile their taxes. In other words, do an amended tax returns with those losses. So let's say you had profitability in 18, and you paid taxes on that profitability, and then in 19 you had losses. Okay, well, you can go back to 18 and refile those taxes. Okay, do amended tax returns and go backwards 1 year with this provision, and actually get a refund from 18, and then whatever's left over, you can carry it forward into this year and move forward. So it gives you a way to kind of, reach back to a prior year and get an additional refund of taxes in your filing efforts. Okay, so by the way, everything I'm sharing with you, I highly encourage you to go and sit down with your tax professional or your investment portfolio advisor. I absolutely, I'm not saying this is gospel, but what I am doing is taking things directly from the CARES Act. Now, how it applies to you individually or as a business owner is different for each and every one of us, which is the great thing about capitalism in America. But it also has to be, and I'm going to state this very clearly, you have to go back and sit down with your tax advisor, your tax professional, and share with them what I'm sharing with you. Let them do their own research. Let them apply it to your tax returns, and they'll advise you accordingly how that's going to work in your benefit or not in your benefit, because everybody has very different circumstances. Limitation on the losses. The legislation retroactively turns off the excess active business and farming loss limitation rules implemented as part of the tax reform to apply after December 1st of 2020 instead of it after December 31st, 2017. Okay, I'm not really sure what that means in the farming industry because I'm not a farmer at the end of the day. So that's something I just put out there for those of you that are in that industry. Prior year AMT credit for corporations allows corporations to claim 100% of the AMT credits in 2019 is fully refundable and provides an election to accelerate claims to 2018 with eligibility and accredited refunds. Okay, limitation on business interests. Okay, generally allows businesses to elect to increase the intention limitation from 30% of adjusted taxable income to 50% for 2019 and 2020, and allows businesses to elect to use the 2019 adjusted taxable income in calculating their 2020 limitation. So you have a benefit here where you can actually write off more of your interest in your business. In other words, interest that you're paying on loans and things of that nature. So That's a positive thing, okay? Loan guarantees and subsidies includes, right now the bill includes over $300 billion for Small Business Administration, SBA loan guarantees and subsidiaries, and additional funding for SBA resources. So they put in $300 billion. Now, mind you, this is a $2.2 trillion bill. And this here just ate up 15% of the bill. Okay, so they're putting a bunch of money into SBA lending guidelines and lending opportunities for small businesses. So if you're a small business, I would highly encourage you to reach out to the SBA in your local area and sit down and see if you even qualify. You might be surprised how many small businesses will qualify for SBA lending, on top of the fact that some of the SBA loans are forgivable, okay, for smaller businesses. And we'll get into more of that as well. All right. So unemployment benefits, okay? This is something we've kind of seen a couple of things bounce across our, feeds and stuff like that. So 3.3 million people filed for unemployment claims, which was shattering the records of all times, okay? It's been crazy how many people have filed for unemployment claims. But also keep in mind that that's less than 1% of the overall population in America. Now, is 3.3 million people out of work something to, brush off? No, not at all. That's not what I'm saying. But what I am saying is that that's only 1% of our entire population, that's a pretty small percentage of people. It's still a big number, 3.3 million. And my heart goes out to those people who have lost their jobs in this current situation. I pray that everybody will get their jobs back sooner versus later and go back to work and put the train back on the track in their personal life and in their family's life. And so that I always am consistently doing. But so you've got 1% of the population that filed for unemployment claims. Extra unemployment payments, okay? The $2.6 billion estimated cost is subject to change based on the number of people filing for unemployment. The bill makes major changes to unemployment assistance, increasing the benefits and broadening who is eligible. States will continue to pay unemployment to people who qualify. That amount varies state by state. So does the amount of time people are allowed to claim it, okay? This is not a forever thing, okay? This is not a forever thing. What's in it for you, okay? Well, number one, you get a $1,200 check as an individual, $2,400 as a married couple. Well, you don't get $2,400 as a married couple unless you both have applied for this, unemployment benefit. You get 13 weeks of unemployment payments, okay? This bill adds $600 per week from the federal government on top of whatever the base amount a worker receives from the state. That boosted payment will last for 4 months, okay? For 4 months, and then it's done with. For example, an out-of-work person is receiving the national average of $340 per week under the new federal program. Their take-home pay will be $940, okay? The legislation also adds 13 weeks of additional unemployment insurance. People nearing the maximum number of weeks allowed by their state would get an extension. New filers would also be allowed to collect the benefits for a longer period of time. Gig workers and freelancers, typically self-employed people, like some of us here, freelancers and contractors can't apply for unemployment. Okay, this bill creates a new temporary pandemic unemployment assistance program through the end of this year to help people who lost work as a direct result of public health emergency. So I kind of have mixed emotions about it. I don't know if that's a good thing or a bad thing for people who are unemployed. I think it's a good thing that they're getting more money because I don't think $340 a week covers a whole lot for the average family of 4. But I think it's a pretty rich, paycheck for people, probably more than they, typically would make. I don't know. I haven't seen the demographics on the 3.3 million people that have filed for unemployment, so I don't know kind of where they sit economically. I do know that a lot of people were from the hospitality industry as a whole. I've got friends, I've got family members that work for Intel, and they're all working from home. I got other family members that work for corporate America, they're all working from home. And so, it just kind of depends on what category is there. So I think as a whole, I think people are going to want to get back to work more than they're going to want to, siphoning money off the government, but it's a pretty rich one. Insurance coverage. The bill will requires all private insurance plans to cover the coronavirus treatments and vaccines, and makes all coronavirus tests free. Okay, so if you've got health insurance, they have to cover you. Okay, no matter what. Okay, so and it's free as a whole. Now, I still think that there's a lack of tests out into the marketplace. They're getting those out to the various states and the cities. I know here in Arizona, you can't just go and get a test. You have to be prescribed, given a prescription by a doctor. And then they have a very, at the Mayo Clinic up in Scottsdale, they have a drive-through testing. Like you stay in your car and there's men and women in, hazmat suits testing you. And that's how they're doing it right now. That's one location that I know of. So, they're doing it as fast as they can, which is a good thing. All right, so we covered that. Next thing. The main feature for small businesses are emergency grants and forgivable loan programs for companies with 500 or fewer employees. There are also changes to the rules for expenses and deductions meant to make it easier for companies to keep employees on payroll and stay open in the near term. Keep in mind, this bill is not a corporate bailout package, all of these companies that are eligible for loans and grants were asked or told by our leaders in DC to stop doing business as usual and to send their employees home as a way of stopping the spread of the coronavirus. So this is by no means a free ride for these major corporations, especially ones in the hospitality industry, in the restaurant industry, which have been, I think, probably hit the hardest. There's other industries like the health and fitness industry, gyms and things of that nature. I got a few friends that own some gyms and they've had to let their people, they've had to lay them off as well. But there's some money available to those types of employees. Emergency grant. The bill provides $10 billion for grants up to $10,000 to provide emergency funds for small businesses to cover immediate operating costs. SBA loans. $10,000 as a cash injection into your business. Forgivable loans. There is $350 billion allocated for the Small Business Administration to provide loans up to $10 million per business. Any portion of that loan used to maintain payroll, keep workers on the books, or pay for rent, mortgage, and existing debt could be forgiven provided workers stay employed through the end of June. So companies that qualify for $10 million, they've got to keep people on the payroll. They don't just get the money and put it in their pocket. They have to keep people paid or on payroll. If they don't, that's a debt on their balance sheet. That's a debt on their balance sheet, which is a good thing for us as taxpayers, which means we're going to get that debt back. If you read through the publications and stuff, people are like, up in arms about this is corporate welfare. They're bailing out big corporations. Well, I don't think they're bailing out big corporations. These big corporations were told to stop doing business. So their hands were tied. They had to send people home. If they didn't, think about the PR nightmare that would have been in place for that corporation as a whole. Not to mention, you got the federal government and you got the representatives in the House and the Senate that would have just had a field day with it, not to mention the overall media. So they were told to send people home and to lay people off. Now their government's coming back saying, we're going to give you this money. You got to bring those people back to work. And you have to keep them working. You can't just hire them on for a day and then lay them off again and take the money. No, you have to bring them back to work and get them going again. Start the engines, get things going. So that's a good thing. Relief for existing loans. There's $17 billion to cover 6 months of payments for small businesses already using SBA loans. So if you're a borrower of an SBA loan, you can get some relief there in that payment for the next 6 months. The bill sets aside roughly $500 billion in loans and other money for big corporations. So what I was talking to you before were what we refer to as smaller companies, smaller corporations around the country. These companies will have to pay the government back, and will be subject to public disclosures and other requirements, which is equal. So this $500 billion, is equal to less than 25% of the overall $2.2 trillion CARES Act. Okay, so I'm saying this because there's a lot of misinformation out there where people are talking about, well, this is just for the big guys. Okay, us little guys, us, middle America didn't really get anything out of this, and it's just for the big guys, And the truth is, the big guys hire people just like the little guys. And either way, it doesn't matter who gets laid off from which side, it's still a person that's laid off and lost their job. So the fact is, they're coming out to the smaller business saying, okay, we need you to keep people working. And we're coming out to the bigger business saying, okay, we need you to get people back to work. Here's some more money because you have bigger overhead. You have larger responsibilities at the end of the day. So it's a very logical way of looking at it and not getting emotional about it that some big corporation got, a bunch of money and now they're just, how do you say, the executives out here buying Lear jets and 200-foot yachts. Okay, that's not going to happen. I'll tell you that much. Not going to happen at all. So airlines, okay, about $58 billion is allocated just to help the airlines stay open. Okay, $58 billion. American Airlines, I think, is the largest one here in the U.S. One portion of that money is set aside to help cover employee wages, salaries, and benefits divided up to $25 billion for passengers. Okay, for passengers, air carriers. Okay, up to $4 billion for cargo air carriers, and up to $3 billion for airline contractors. Okay, it's not just American Airlines getting all the money. It's a whole tier of different industries that support that industry that are getting bits and pieces depending upon their role in their overall, loss based on the current environment. Okay, so right there you've got just $58 billion going to one industry alone. Not bad. I mean, considering the size of that industry as a whole. There's also $100 billion to shore up the healthcare system. Okay, billion for hospitals and healthcare systems, billions more for testing supplies, protective equipment for healthcare workers, and construction of more space to house patients. Okay, they've already brought in the Navy ships, the medical ships, and they've started housing people in those ships based on the coastlines and stuff like that. You've got people like Tesla, General Motors, and Ford, which have gone to work making respirator masks and things like that. By the way, they're not doing it for free, just kind of FYI. They're getting paid by the federal government to produce those masks. Okay, so although it looks like a very goodwill type, move on their part, and I think the medical industry is very grateful considering the lives that it protects. It's not a freebie. Okay, it might be. Okay, they may decide in the end, hey, we're just going to write this off and get some kind of tax rebate, some tax credit or something like that, and that might end up happening. But as of right now, they are getting paid. Okay, to do that. Stock buyback ban. Okay, we've heard a lot of this in the news. A company receiving a loan under the program is barred from making stock buybacks for a term of the loan plus 1 year. Okay, so if American Airlines, which was doing buybacks, Boeing was doing stock buybacks for the last several years, if they take on a loan from, under this provision, they cannot do any more stock buybacks, okay, which stock buybacks, ultimately benefit the shareholders and the board and all of these other individuals that I would say are on the top of the food tree under those corporate structures. They don't get to do any of that. So if it takes them, say, 2 years to repay the loan back, okay, then they got to add another year. So they can't do any corporate buyback of stocks for 3 years as a whole. So keep that in mind. So when you hear people screaming and ranting and raving out there, educate them on it, okay? It's not going to be allowed as a whole. Reporting requirements, all loans, their terms, and any investments other assistance provided by the government must be publicly disclosed. Okay, so every company, every major company that's going to take money to shore up their, their operating expenses and things of that nature is going to have to disclose, and it's going to be disclosed not by the company, it will be disclosed by the federal government and who they were, how much they took, and the terms of the loan. So we as taxpayers know, hey, yeah, this money's going out to help ABC company, but we're going to get it all back into our coffers in 24 months or 36 months, whatever it may be. It might be 5 years as a whole. It all depends on their balance sheets, their revenue streams and things of that nature. Okay, it will typically be a low interest loan, probably in the 1 to 2% range, given the fact that prime is at 0 right now. So it's going to be a very low interest loan, but it's not designed to, create billions of dollars for the federal government. It's designed to keep people working. Okay, so what's the money being used for? It has that direct focus on it. Oversight. So oversight as well as reporting requirements. The bill creates a special inspector general to oversee pandemic recovery. That person, along with a special committee, would provide an oversight of all loans and other uses of taxpayers. Every company that receives money from the CARES Act will be made public info within 7 days from receipt of monies. Okay, no benefit for Trump. Okay, the president, vice president, members of the cabinet, and members of Congress are barred from benefiting from the money carved out for corporations. That also extends to the spouse, children, son-in-law, or daughter-in-law of any of those people. Okay, so it doesn't matter if you're a left or a righty, it doesn't really matter. Nobody in the House of Representatives can take advantage of this. So case in point, Trump, okay, he owns hotels. Okay, that's one of the things that he owns. He's got several hotels that are shut down. I think he's got 4 of them in the U.S. that are shut down. I know Mar-a-Lago is shut down. I think Las Vegas is shut down, although he doesn't own the Las Vegas hotel. It's a branded hotel. Chicago is shut down. I think his Washington, D.C. hotel is operating, but it's operating like at a 5% capacity right now. So it's got a ton of vacancies if you want to fly to D.C. and hang out there. None of those hotels can get any kind of, relief funding out of this bill. Okay. Same thing with Pelosi and her children. Same thing with Joe Biden and his children. They can't get relief at all. Same thing with John Kerry and his kids or anybody else. So the bottom line is that it's designed to bypass all of those people and trickle down into the hands and the organizations that need it the most. Now, mind you, that's based on them owning 20% of the company. Okay, based on them owning 20% of the company. So if they own 20% or more of the company that owns that asset, they cannot borrow down on that and get the relief. Now, if it's less than 20%, they can get it. Okay, so if you hear somewhere down the road, hey, ABC senator got a loan, chances are the reason he got the loan because it went through the oversight committee and they own less than 20% of that particular investment. Maybe they were a 5% investor in it, whatever that may be. Maybe it's pick something as a whole. Could be hospitality, could be something else. All right. I'm almost done here, guys. Actually, I've got 4 more pages. The bill establishes a fully refundable tax credit for businesses of all sizes that are closed or distressed to help them keep workers on payroll. The goal is to get employees hired back and put on paid furlough to make sure they have jobs in return. The credit covers to 50% of payroll on the first $10,000 of compensation, including health benefits for each employee. Okay, so they're giving another health credit, tax credit to those of us that are business owners with employees. For employees with more than 100 full-time employees, the credit is for wages paid to employees when they are not providing services because of the coronavirus. Eligible employers with 100 or fewer full-time employees could use the deduction even if they aren't closed. Okay, so if they've got 100 or more people under payroll, they can still use the deduction, even though they may not have laid anybody off. All right, let's jump into mortgages. Okay, we kind of covered, key number 1. So that was key number 1, what I just got through. By the way, it speeds up here a little bit because we're breaking it down a little bit differently. The second recovery key for today's call, mortgages. Okay, homeowners who have lost, and this is the way it reads. Okay, and because I'm in the mortgage industry, I'm gonna add some extra insight to this as well. Homeowners who have lost income for their jobs because of the coronavirus are getting some relief. Depending upon the situation, they should be eligible to have their mortgage payments reduced or suspended for up to 12 months, okay? Now you have to be able to do that in 6-month increments. It's not just 12 months vacation so you can go to the Bahamas and hang out, okay? That's not what this is all about. Federal regulators through the mortgage grants, Freddie and Fannie, are ordering lenders to offer homeowners flexibility. The move covers about half of all home loans in the U.S., those guaranteed by Freddie and Fannie, but regulators expect the entire mortgage industry to quickly adopt a similar policy. Okay, so if you're a Freddie or Fannie borrower, okay, and you're feeling financial stress from being out of work, you can go to Freddie or Fannie and get relief. You can get, first off, you can get 6 months, and then you have to reapply for another 6 months for a total of 12. It's not just 12 up front as a whole. Under the plan, people who have suffered a loss of income can qualify to make a reduced payments or be granted a complete pause in payments, okay? That forbearance is up to 12 months, depending upon their particular situation, and the homeowner will have to requalify after 6 months of forbearance. Homeowners cannot just stop making your payments, okay? So share this information out there, because I'm sure there are people out there saying, hey, this is 2008 all over again. We'll just stop making payments. Oh, no, 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 no. We learned a ton from the 2008 downturn in the marketplace. And there's a lot of stop loss preventions in place in this bill that will prevent that from ever happening again. So people who are saying, hey, the sky is falling, this is going back to 2008, how you say, opportunities. It's not. I'm in the note buying business. I've been in it for 24 years. I can guarantee you, thus far, I have not seen any indication that we're going to have an onslaught of foreclosures hitting the marketplace at 10 cents on the dollar. It's just, I don't see it happening, okay? And the reason is because there are a lot of stop loss provisions put in place. Now, let me continue on here. So homeowners can't just stop making the mortgage payment. They need to contact their servicer. This is, that is the lender that they send the check to every month. That lender will work with you to be able to work out a payment plan. The hope is to get homeowners back on their feet as soon as possible. Note, people in financial distress because of the coronavirus just can't, or let me make a note here, sorry. People in financial distress because of the coronavirus can just verbally, okay, so this is how easy this is, can verbally testify that over the phone with their lender. Documenting the hardship can come later with your lender. You're not going to have to send 20 pieces of paper to qualify. The goal is to do this quickly, okay? So if you're in that situation, or you've got a family member or a loved one that's in that situation that may find themselves doing this, they can get on the phone right now and start reaching out to their lender, as long as it's Freddie or Fannie. The other aspects of the industry are adapting it as well. I just don't know where they're at in the process. I know Wells and Citi are pretty far along in the process. And they can do a verbal confirmation of, hey, I lost my job. I need 2 months off or 3 months off type thing. Now, the lenders are going to have, they've got their own guidelines that you're going to have to fall into and match up to make it happen. But they're going to ultimately give some relief. Now, keep in mind, okay, let me get a little bit, here's a word of caution, okay? Don't abuse this option and think you're going to get away with not making payments. All of the interest will accrue on your loan, which will eat up the equity in your home, and you will have a higher payment after the deferment period, okay? So they're just going to, continue to accumulate your interest. So let's say you're paying $1,000 a month in interest on your loan. Well, after 12 months, you've got $12,000 that has now been attached to your loan, which one of two things are going to happen. Number one, it's eating up more of the equity in your property. Number two, it's going to either increase your mortgage payment going forward, or you're going to have more years added to the life of your loan. So if you're sitting, in a newly created loan of, say, maybe you're 29 years right now, then you're going to add, if you let it go for an entire year, you're going to add probably 2 to 3 years more to your payment, okay? Not necessarily a smart move, but I understand if it's a necessary move, then you do it, okay? It's the less of two evils as I look at it. But if you're sitting here saying, I could take a couple months off here and I could just, kind of skate through this whole thing, understand you're still going to be responsible for paying that money back, okay? You may get a I say, reprieve from it for a little bit, but you're going to pay it back at the end of the day. Fannie and Freddie are directing lenders not to report people to the credit bureaus for later missed payments if they are one of these forbearance plans. Keep in mind, credit bureaus do not know how this is going to affect borrowers' overall credit score for both the short and long term, and will most likely still have a negative effect, okay, on credit bureaus due to the fact that they have not created this type of algorithm in their reporting model. Okay, this is new to the credit bureaus. So if you're not making payments on a particular loan, that balance is not going down, and you're not showing consistent pay history on that loan. Yes, you're not getting a negative, but you're also not increasing your score at the end of the day. So keep that in mind, that they're saying, yeah, we're not going to report it, but because we're not reporting it, you're not going to necessarily move the needle in your credit environment through that mortgage. Now, you may move it in regards to paying down credit cards or paying down automobile loans. That's still kind of, the jury's still out on some of that stuff in regards to whether or not there's going to be some relief in that environment. I think we may see that in bill number 3 coming up, which will, like I said, probably, start circulating throughout DC here in the next probably week to 10 days. But right now they're focused on this one. Two of the nation's largest lenders, Wells Fargo and JP Morgan, are already working to help homeowners who have been financially hurt by the outbreak. Also keep in mind, okay, these moves do not do anything, okay, to help renters, okay? Many of the municipalities are halting evictions for people who can't pay rent, and housing advocates hope that the federal government comes up with a program soon to offer financial assistance to renters who in most cases have fewer financial resources than homeowners, okay? So if you're a landlord and you own the house and that renter's not, you can still technically evict them. Now, if your city's saying, you know what, you can try and evict them, but you're not coming into court and we're just going to prolong your case, that's kind of how they'll work that process with you. Here's my advice, okay? And having dealt with people for years and getting them to pay and do things, educate your renter, okay? Educate your renter in regards to what's possible. In other words, hey, if they can't afford to make their payment on April 1st, what can they afford to make? Now, some of you go, no, Troy, you do that, then you mess up the whole lease agreement and everything else. Hey, you can modify the lease agreement. Okay, you can sit down and modify a lease agreement with that renter. So if they only have half the rent and they're on unemployment, you heard the numbers on unemployment, they're going to be getting some pretty sexy money pretty quick. You heard the money that's coming at them from, if they're under that 69,000 mark or that 150,000, you heard the money that's coming that way. And that's going to be here probably, I'm going to say, by mid-April. Okay, it's going to happen sooner versus later, especially for the direct deposit people. Ones that are just getting checks, that's going to probably take 4 to 5 weeks. Sorry for the bad news. My point being is that sit down with that tenant, okay, and find out what you can do to work together. It's cheaper to keep a tenant in place than it is to evict them and start over, okay? In other words, it's cheaper to keep a customer than it is to go get a new customer. Now, I know that some of you may kind of take a position of a principle in the situation. Nobody wins on principle in these environments, okay? Cooler heads will always prevail. You'll always do more. You'll always get further in these types of environments operating with a cooler head. So sit down with that renter. Find out what their situation is. Get to know them. Even if we're doing this social distancing thing like we are right now, pick up the phone and talk to them. Right now, we're not due for April 1st. Okay, that's not here yet. But so be proactive in the situation and figure it out. I was talking to a friend of mine that owns a number of rental properties, and they're all paid for. Okay, he's got, 40 plus rental properties here in the Phoenix marketplace, and they're all paid for. He bought them all cash in the downturn in the marketplace, and they're worth, millions more. My point being, I asked him, I said, what are you concerned about? He goes, I'm not concerned about anything. I said, okay, any concerns? He goes, I'm going to probably collect, 80% of my rents on it in April. And there's probably going to be about 20% that I'm not going to collect, but I'll probably just forgive it and move on because it's not worth his headache and his time to go through the process. Now, I know some of you go, hey, you give a person an inch, they're going to take a mile. Okay, there's some people out there that are going to do that. But his attitude towards it is, hey, if I forgive a payment here, a payment there for the really, really needy families, and I can get them back on track by May once they get their stimulus checks, and if they're getting unemployment checks and that's been boosted up, then I'm going to get my money for my May payment. I'm going to move on, and we're going to create a tighter relationship at the end of the day. People ask me at Pinnacle why we have such a low percentage of foreclosures in our business, and the reason is because we build relationships with people. If somebody gets behind, our first how do you say plan of attack is not to issue a notice of default and go after them. Our first plan of attack is find out, hey, what's going on here? And as an entrepreneur, we have a responsibility to solve problems, okay, not create more problems at the end of the day, even if it doesn't look the way we'd like it to look, okay? Even if we have to get out of our beach chairs and get our feet out of the sand and go back to the office and make a phone call, that's what you got to do. Welcome to the world of entrepreneurship. So that doesn't help renters, okay? Student loans, okay. 2 pages left, guys. All right. So Trump administration has stopped collecting from borrowers who have defaulted on their federal student loans, okay? That reprieve could impact 9 million student loan borrowers currently in default. Secretary of Education Betsy DeVos last week informed private collection companies to stop calling borrowers, sending collection notices, or taking steps to seize portions of their paychecks. The restrictions will be retroactive, okay? They're going backwards, okay, to March 13th and last until further notice. The Education Department also plans to stop referral of defaulted student loan accounts to the Treasury Department for garnishment of wages, okay, tax refunds, and Social Security payments. So if you're sitting there going, I don't want to file my 2019 taxes because they're going to take that money, hey, guess what? That option's off the table for them right now. Go file it, get your refund, and then get your stimulus check. DeVos has directed the Treasury Department to refund approximately $1.8 billion in offsets to more than 830,000 student loan borrowers. Okay, so this is money that they've, cleaned out of their accounts, or their employer has sent the money to them, or they, swiped it out of their tax returns and things like that. They've now instructed, no, we're going to give this money back to these people who owe the student loan debt. Now, their unpaid principal balance is going to go back to what it was, so they're not going to get that credit, but they're going to get that money back for a short period of time. There was no forgiveness of student loan debt included in the CARES Act bill that was just passed by the Senate and the House as of today. They were given a deferment that will last until 2020, okay? So they've got a deferment on their student debt, on their student loan payments until September of this year. Okay, that's what they were given. So when you hear these articles that, the Republicans are going to give 10% and the Democrats want, not 10%, Republicans want $10,000 and the Democrats want $30,000 of loan forgiveness. No, that didn't happen. Okay, that's not even a conversation as in this. According to the New York Federal Reserve, out of the $1.5 trillion in student loans, there's currently 11.1% of all student loans that are 90 plus days delinquent as of March 21st, 2020, which equals about 166 billion, a little bit more than 166 billion in delinquent student loan debt in the US. The upside to this is that 88.9, this is my little spin on it, is that 88.9% of the student loan borrowers are making their payments on time, okay? That would give the student loan debt market a B++ rating in the debt market's overall grading score. Okay, so when you hear these stories about people not making their student loan debt, okay, and they did the same scenario back in 2008, okay, when the housing market was on, thin water, thin ice. So they went back and they're looking at 11.1% of the overall $1.5 trillion in student loan debt is 90 plus days delinquent, okay? Not good, but not the end of the world either. So that means 89%, okay, 88.9% are making their payments. Now, I don't know about you guys, But hey, if I got an 88% on a test in high school, I got a B. I got a B plus. Okay, so did you. So as an economy, as a country, that segment of the economy, student debt, they're getting a B. They're getting a high B for making their payments on time. The same thing happened in the mortgage markets back in 2008, 2009, 2010. Is that we rose up to about a little bit over a 9% default rate in the first lien mortgage industry or housing industry, and everybody had lost their minds. But if you go and look at it, you had 91%, okay, of the people were making their mortgage payments. Now, they probably weren't getting, new cars and boats and RVs and things like that, but they were making their mortgage payments. So 90+% of America back in 08, 09, even in what we would consider one of the worst times in our country, economically speaking, were making their mortgage payments. Not a bad thing, okay? Typically in the mortgage market, you typically see about a 1.5 to 2.25% foreclosure rate or default rate on mortgages, even in a good economy. Okay, even up until January of this year, you still had foreclosures going on because that's a byproduct of the lending environment. Okay, and it will always be a byproduct of the lending environment. Okay, it's ideal that we keep it in the low single digits, but at the end of the day, it's still a byproduct and it will always be a part of our economy. All right, after 11-day bear market, okay, our stock market switched into a bull market. And as of today, it's, it had a great run. It had about a 26% increase, okay, in the last 3 days in the stock market. And, but as of today, and I think, let me check where we're at on that stock market report. Yeah, it's not pulling it up. So, but we're probably going to have a little bit of loss, which is somewhat kind of typical on Friday trading days as a whole. So I'm not too worried about that. I think you're going to see the stock market return up to above 25,000 probably by the end of April. You're going to see it right now. I think we're sitting like 22, like 21, 22, high 21s, low 22. Last time I checked my feed there. My point being is that you're going to see it increase. Once the market starts to see the stimulus package going out, people going back to work, getting their jobs back, getting paychecks, all of that stuff in place, and the uncertainty is removed or sucked out of the environment, then everybody will go back to what we call kind of a normal environment of buying and spending and doing those types of things. And then you're going to start seeing the market improve as a whole. Now, I want to just cover this, the last key. This is key number 3. We're going to wrap this thing up. Actually doing pretty good. I thought it would be a lot longer. So here's 10 stock picks. Now, I'm not going to guarantee these stocks as returns. I'm not saying they're the best stocks out there in the marketplace. I follow typically 2 people when it comes to stocks, and they're doing very well in this particular space right now. And so I'm going to share with you what their investments are, and you can certainly follow them yourself if you want. Or you can sign up at fool.com, FOOL.com. It's a newsletter called Motley Fool, and it's got a lot of great stock insights and things like that if you're a stock investor as a whole. I think it's a great time to get in that environment, and here's why. We've seen what the market does. We've seen the elasticity in the marketplace. We saw it go all the way up to 30,000. We saw it come all the way down to 18, and now it's moving back up again. So, it's not a great time when it's going down unless you're going to short the market, which a lot of people did and made a lot of money. Okay. Now people are starting to go long on the market again. Prior, they were doing that back in February, and they were going long on a lot of trades and things like that. So they were making money in that upswing. If you want to pick a particular stock because you're a fan favorite of it, like a Disney stock or something like that, you're probably going to do just fine. Okay. At the end of the day, will it be enough money to retire on? I don't know. It depends on how much you buy and what you go and what your goal is with it at the end of the day. But here's some stock picks. Okay. The first group of stocks, okay, is by a gentleman named Bill Ackman. Okay. He's a hedge fund billionaire. He runs Pershing Square Capital Management. And just last week on March 23rd, 2020, he cashed out on a play that he made. He invested $27 million and on March 6th, and he cashed out for $2.6 billion on March 23rd. Okay, not a bad return, and which makes him a guy you'd want to follow at the end of the day. Okay, so he created a 7.9% overall return for Pershing Square Capital. Okay, not a bad return considering about a, I don't know, 17-day play in the marketplace. And this return is also used to offset losses in other aspects of their portfolio. Okay, so even though he, made a 7.9% return, it would have been higher had he not have had losses in other aspects of his portfolio. So some areas he got caught on, but other areas he, went from 27 million to 2.6 billion. Okay, which was an overall 7.9% return on his entire portfolio. Okay, so good thing to remember. So here's what it breaks down to. Okay, what he's recommending, where he's putting his money. Now this is the person who I'm taking where he's putting his money where his mouth is, and this is what he put money into. So this 2.6 billion that he cashed out on the 23rd, he immediately turned around and this is what he bought. He bought Berkshire Hathaway. Okay, good stock, inexpensive stock, but a good stock. If you can afford to buy it, okay, it's a great stock to even own a single share of because you get invited to the annual meeting. Okay, great stock. Hilton, okay, Hilton Hotels, another great stock. Hospitality industry. Lowe's, he invested in Lowe's. Home improvement, okay. Restaurant Brands International, okay. It's actually, I'm not really sure what Restaurant Brands International does overall, but I believe they're in the, restaurant business here in the U.S. and own several brands under that. Agilent, okay. Agilent, I believe, is a pharmaceutical company. He invested in that. It's Agilent is the name of the company. And then he also, the fund also reestablished a stake in Starbucks, okay, after it had sold its position in January. Okay, so it sold in January at the peak. Now Starbucks has gone down, and now he's reinvesting in it because he knows it's going to go back up. Look for companies that are staples of our culture and our environment here in the U.S. If they're down right now, they're going to go back up. Hilton Hotels is down. Is it going to go back up? Absolutely. People are going to start traveling again, and they're going to start going to Hilton Hotels. They're also going to go to other hotels as well. So look at other brands also. And then the next one, okay, that was 6. I'm going to give you 11 of them today. So the next person that I like to follow is Buffett himself, okay, is Warren Buffett. And his picks, okay, for March 23rd, 2020 is U.S. Bancorp, okay, U.S. Bancorp, banking, okay. The symbol on that is USB. Teva, Pharmaceutical Industries, okay. Their symbol is TEVA. And then Visa, number 3 is Visa. Symbol is V. They're traded on the New York Stock Exchange. Those first 3 were all traded on the New York Stock Exchange. This next one is traded on NASDAQ, okay, and it's Sirius XM Radio. And the sign for that is SIRI. And then there's Coca-Cola, okay, which is traded on the New York Stock Exchange, and it's KO, okay, is the exchange or the symbol for that. So those are Buffett's, okay. Now he's been in Coca-Cola for a while. He's a big fan of it, drinks a lot of it. It's kind of one of his staple aspects of his diet. These are just what these gentlemen are putting their money into. You may have some better ones, which is great. I hope people take advantage of the current condition of the marketplace. It's not a sky is falling when you've got cooler heads and you're looking for opportunities in the marketplace. People always talk about, I'm waiting for the environment to change. I'm waiting for this, I'm waiting for that, and then I'm going to start getting involved. Well, guess what? It changed. Okay. And it didn't change the way a lot of people thought it would, given that they assumed that the housing market was going to go immediately in the tank. It's not going to go in the tank. Okay. The housing market is incredibly strong right now. I'm in Arizona. It's still very strong as a whole. And and how you can see is really simply, what are the amount applications, mortgage applications. Last week, it was down by 30%. Here's why it was down. Okay, let's kind of, I say, roll back the time on this a little bit. So back in late February, okay, the feds dropped the rate. The mortgage rate went down to 3% for a 30-year fixed rate loan. That was kind of an average nationwide. I think it was like 3.1 to be exact. Here in Arizona, we could get it all day long at 3%, even down to a 2.97%. So you can get a little bit lower than that. And that's on a 30-year loan, on a refi or a purchase. Point being is that what happened is mortgage applications just skyrocketed. They couldn't keep up with the demand. So after a week or two of taking in all these applications, they started raising rates to taper off the amount of applications coming in. Okay, so they tapered it all off. They raised the rates, which kind of is a way of, how you say, kind of pumping the brakes. It's kind of like, if you're running a successful business and you've got a line out the door, it's a good time to probably raise your price on your, how you say, your filet dinner a couple more dollars so you can, how you say, take advantage of it. Well, in the mortgage industry, that's kind of their way of doing it. But here's the bigger thing to understand. In the mortgage industry as a whole, 2019, there were $2 trillion worth of mortgages originated in the United States on single family residential properties. Okay, 2 trillion. As a whole, the feds typically hold around $11 trillion worth of mortgages in their portfolio, 11 trillion. We added $2 trillion to that. Now, some of that was refi stuff. Some of that is somebody selling a house over here, then buying a house over here. So it kind of, how you say, cancels one another out. But $2 trillion was the number that was hit in 2019. Because of the mortgage application demand that happened at the end of February, that was estimated to jump up to $4 trillion in the United States. Now, that's a huge number. You're doubling the amount of business in the system, but you're not doubling the amount of people in the system. So given the fact that everybody was busy last year, very busy, title companies, appraisers, inspectors, mortgage loan officers, underwriters, all the above, if you weren't busy, then you just didn't want to be busy, I guess was the way to view it. But they did 2 trillion, and this year, because of that demand, they were projecting $4 trillion. So you can't dump $4 trillion worth of mortgage originations on the current infrastructure that's in place. So the way to kind of, how to say, ease that pain is to ultimately, pump the brakes a little bit by raising the rates. So people kind of taper off a little bit. The rates are starting to come back down again this week. I think it got all the way to like 3.8%. And now they're starting to come back down to, I think it's like 3.5%. So it's coming off a little bit. So they've gotten those pipelines and those original people moving through the pipeline and getting originated and things of that nature. The other part of it is you've got houses like here in Arizona. We're still seeing houses, $500,000 houses selling within 48 to 72 hours. Now, I was on the phone with a friend of mine who runs a title company. He was the founder of a title company, and we were chatting yesterday for a little bit, in preparation for this call. I said, okay, what's going on? And he says, people are canceling their escrows during the inspection period. Here in Arizona, they can cancel within 10 days. And what they're doing is they're canceling it and then going back to the homeowner, the homeowner, and asking for a $10, $20, or $30,000 price reduction. Now, some homeowners are saying, no, we're not doing that. We're sticking to our guns, and that's their choice. And that buyer might have to go out and find another house. He says we've also seen some people cancel their escrows because of a husband and wife or one of the partners in the marriage were laid off. Okay, so they said, oh, we're going to wait a little bit, then we're going to come back and do that. So when you start seeing the reports and the craziness that the media has a way of, spinning stuff into lies, or and it's all fear-based garbage. Think about what I'm sharing with you, because this is really the granular aspect, from the street level side of it and what's happening as a whole. It's the same thing when somebody says, well, we sold the house for over ask. Okay, but if your ask was below market value, of course you're going to sell it for over ask. And realtors will do that. The house is worth $500,000, so they list it for $475,000, and it sells for $495,000, and they get to go out and tout as part of their marketing, Hey, I sold it for over ask. Okay, technically you did, but you underpriced the home as well. But you did start a bidding war that got the price back up, which is fine as well. So you kind of have to read between the lines on some of this stuff as a whole. All right. So here's what I hope for. Okay, once this is all over, I hope the stock market will return the money that you lost. Okay, and more. That your little ones will go back to school and hug their friends. That you'll go back to the office and acknowledge people you barely noticed before. You'll happily wait for an hour for a table at your favorite restaurant. You'll take your kids to a ball game and buy extra hot dogs and soda. You'll go to a concert and dance like you did back in high school. You'll rush to the movies and order extra butter for popcorn. You'll get on a plane and go visit family you had realized you love so much. And servers, stadium attendants, concession stand workers, flight attendants will give you the biggest smiles that you've ever seen. And that you will, in your own way, forever pay tribute to our first responders, doctors, nurses, and healthcare workers, because they were the soldiers that protected us from this hideous enemy. Until then, be patient, be strong, be kind, be safe. Troy Fullwood, the Thriving Investor. Take care, guys. Bye now.